Houston Real Estate Radio.
Good afternoon and welcome to Houston Real Estate Radio. I'm your host, Shannon Register, and we are your voice for Texas real estate news and information you can use. You can join us here every Sunday from 2 to 3 p.m. for all the latest real estate news and information. If you have questions, you can also call those into us at 281-288-8088. Last Sunday, we did a very special show. We were honoring our veterans for Veterans Day. Great program that we have. If you missed it, you can catch those videos at HoustonRealEstateRadio.com. We're also now on iTunes. So as we kind of wrap up our last week's Veterans Day show, I wanted to bring in a very special guest to talk with you. He is a lender and want to talk a little bit about VA loans and some of the advantages of being a veteran when it comes to buying a home. So I have with me here in the RREA.com studio Mike Lesmeister. He's with Ameripro Funding over in Spring, and he is the person that we go to when we need person that I go to when I need someone to pre-approve my clients so that they can purchase a home. We always want them to get a pre-approval so that we know how much home they can afford and make sure that we're looking in that right price point for them. Mike and his partner Rick work very closely with us here at Register Real Estate Advisors. So very happy to have him on the show with us today. So welcome, Mike.
Good afternoon. Thanks for having me.
So what are some of those advantages and some of the features about VA loans that really make it a good opportunity for veterans who want to purchase, especially first-time homes?
Yeah, well, that's a great question. I mean, in this environment, we need to be doing everything we can to take care of our veterans, whether that's from the employment standpoint or in this case, from financing. VA, in the wake of the mortgage meltdown, VA really has become one of the most competitive mortgage financing programs that's available on the market today. And you asked about some of the advantages, and let me maybe go through a couple of those with you. The first, for most veterans, it's about the only program available that allows them to get into a home with no money down. Now, obviously, that doesn't mean that they have zero money out of their pocket. We still have inspections and appraisals and things like that, but there's no formal down payment requirement. With conventional loans, FHA loans, there is a minimum down payment requirement. Another big advantage is the fact that VA loans have no monthly mortgage insurance. As you're aware, and probably a lot of your listeners are aware, anytime you put less than 20% down on a conventional loan, you're going to have monthly mortgage insurance.
Right.
With VA, you don't have that. So that's not only a savings for that veteran, but it also can allow them to qualify for more of a home than they otherwise would be able to. VA, really government loans in general, whether it's VA or FHA, offer also some of the lowest rates that are available on the market today too. Right now, rates on VA loans are in the very low threes, and that's near historical lows.
Very competitive rates.
Exactly. So very attractive there. Also, in an effort to kind of help those veterans, VA underwriting tends to be a little bit more flexible too. Allows a little bit higher debt ratios. In other words, you can have more payments relative to your income than you could, let's say, on a conventional loan. So that's also a big advantage. And then there are also some other benefits for some of those veterans that have service-related disabilities. There are specially adapted housing grants for veterans who need help with putting in some infrastructure into their home to help them get around. There are some other benefits too to those folks that have had service-related disabilities.
So really, if someone has been in the military, this is a great advantage for them when they get ready to purchase. Not only is it only for homes, or can they also purchase land to build on?
There are some land programs out there. Obviously, what most folks are aware of is the housing program, and it can be for both new construction or existing construction too. So you can build a house, you can buy an existing home.
In Texas, we're very fortunate here in Texas to have the Texas Veterans Land Board. That's a great program for veterans who don't know about that. You can go online and research it, and it definitely can help you even lower your interest rate a little bit.
Yeah, the Texas, we really are fortunate. The Texas Veterans Land Board really has a very, very competitive program that affords veterans the opportunity to get home loans, land loans, home improvement loans as well at subsidized interest rates.
Yeah. Do you see very many VA loans being used in our area? We're not close to a post, so I don't know very many people around who are looking for VA loans, but I'm sure there are. Do you see a lot of them?
We see a lot more now than we used to. And it's funny, up until maybe 2 years ago, it would be maybe once a quarter that I would do a VA loan. And now we probably work with veterans on VA financing probably a couple of times a month, 2, 3, 4 times a month. So I think it's, number one, you do have a lot of service members that are returning from active duty that are retiring. You do have other folks that maybe had that eligibility, that VA eligibility, but maybe weren't in a position to buy yet, and now they are taking advantage of some of the excellent buys that are available in the real estate market today. So yeah, we are seeing a lot more of it. The awareness is increasing.
And there's some great reasons to buy right now before the end of the year. Tell us about some of those reasons.
Yeah. I think the biggest one is the availability of the homestead exemption for folks who buy before the end of the year, and it is their primary residence. They'll be eligible to get that homestead exemption on their 2013 property taxes. If they close on their transaction after the first, they'll be paying that higher property tax rate for the entire year and won't get the benefit of that exemption until 2014.
Yeah, I think some people don't realize that you have to be in your house on January 1st. So if you close on the 2nd or the 3rd, you're going a whole year without that benefit.
Exactly, and that could be hundreds or thousands of dollars of extra property taxes that there's no need for you to pay.
Right. So what about refinancing? Do you still see a lot of people refinancing?
We do. Rates have been low for a long time now, so a lot of folks.
If you were going to do it, you've probably done it by now.
Exactly, but the funny thing is that we are starting to revisit refinances for people that we refinanced 2 years ago.
Really?
Because rates have come down that much. If you think about it, somebody who maybe refinanced a couple of years ago at a 5% rate, if rates are now at 4 or even 3.5%, you're talking about a 20+% interest savings for those folks, right?
Wow.
So we are doing that, and it is something that folks should take a look at. I mean, I always like to say, if your interest rate's even 4.5% or higher right now, it behooves you to at least look into it to see if it makes sense. And there's some software and some analysis that we can do for folks to really see, what is your break-even point when you think about maybe the hard costs of going through a refinance and that interest rate savings. How long do you need to be in that house at that new rate to overcome those closing costs?
Right, yeah. So, we just came out of the election, which was interesting. I want to talk later in the show about kind of some of the things that we expect to come out of this election and kind of where we're heading as an economy. And I mean, really, the housing market's a huge driver of our economy. So I want to talk about that later in the show. But right now, I'd really like for you to tell us, what do you think, what kind of impact do you think this election's going to have on our interest rates and our housing market? Where do you see it going?
Well, for better or worse, uncertainty is always good for mortgage rates. Okay? The mortgage rates are really tied to trading in the bond market. And what happens is anytime you have uncertainty, whether that's uncertainty about the budget, uncertainty about growth prospects in the economy, even global financial concerns, that always tempers interest rate adjustments. And right now you have a lot of that uncertainty. I mean, the most popular thing out there to talk about right now is this fiscal cliff that everybody's talking about. And will that problem get solved? Will we avoid this massive tax increase and these massive budget cuts that are scheduled to go into effect at the beginning of the year? So you have that. You also have a lot of, this continued uncertainty that's going on in Europe with Greece and Spain and so forth. So, so as long as we have that uncertainty, that is going to make bonds a safe investment and people will be attracted to bonds, and that's going to keep interest rates relatively low. If we suddenly start seeing that growth bounces back, we solve a lot of these problems, and or inflation clearly really enters the marketplace in a substantive way, at that point we'll probably start to see rates inch up a little bit. There's always going to be daily volatility and weekly volatility, so that that doesn't mean that rates on a week-to-week basis may not increase a little bit. But I think in the short term, at least short to intermediate term, I think interest rates will remain low.
Okay, no big jumps coming in the real near future.
Now, of course, as soon as I say that, we're going to start to see them jump next week, right?
So what are rates currently right now if you want to go buy a new home? What kind of rates are you looking at?
Yeah, a lot of it depends upon factors such as your credit score, the down payment that you're putting down on the house, and what type of loan program you go with. We talked about conventional versus VA rates a little bit earlier, for example. But in general, you're looking at rates right now in the low to mid 3% range, assuming that you're not paying any points. If you pay an origination fee or a discount point, you can certainly buy a rate lower than that. We typically don't recommend that for
it's
most
already
folks.
So low.
They really are. They really are. And in some cases, you're not getting a lot of extra rate reduction for those points that you're spending. So we typically don't recommend that for most folks. But once again, we're near record lows right now, so it certainly makes sense for folks to be looking at financing, and even folks that that may have cash to put a large down payment on their home. When you think about what is the sort of long-term cost of your money, when you can lock in interest rates and anywhere in the threes, if you believe over the long term that interest rates are going to go higher, might be a better use of your money to kind of keep it socked away, invested in some other avenues, versus putting a lot of extra money down on your house. But something to think about.
Right. Is it still difficult to get a loan? We've heard over the last year how difficult it's been for people to get a loan, and we've seen that here at the brokerage. We've seen a lot of loans kind of fall out, because underwriting asks for things and kind of at the last minute, and it just becomes quite a demand on home buyers. What do you? How are those things going? Are things getting better? Are you seeing that money's getting a little bit looser? Requirements are getting better? Or staying the same?
I would say that there really hasn't been a lot of movement on that, as much as it would. I'd like to be able to say that things are loosening up, that underwriting is getting much more flexible. We're still in an environment today where better than 95% of all loans that are originated are either underwritten to government standards or being guaranteed by the government. And what that means is that there's a lot of standardization in underwriting. No lender wants to be in a situation where they originate a loan that didn't have an I dotted or a T crossed.
Right.
That loan gets sold to the government, and then they're forced to buy it back 2 years down the road because of that that technical error. So underwriting is still strict. A lot of our borrowers, they don't understand why they have to do a simple letter of explanation or provide some additional documentation, but it's all about making that loan eligible to be purchased by the government or be able to be purchased on the secondary market. So it's not about not believing that a borrower is creditworthy. It's all about documentation. That's what it comes down to.
Yeah, and I think it's important for consumers to know just because you pre-approve, that's not the end of the process. There's still a long ways to go on getting the loan actually approved and ready to close.
Yeah, and that you bring up a good point with that comment, Shannon. I think it's important when you have folks who are looking at buying a home and who are looking at getting pre-qualified, that it really is important to make some of those extra steps on the front end, provide your lender with that additional income documentation, with that asset documentation. It's very easy to get a pre-qualification form where somebody just pulls your credit and sort of takes your word for how much you're making and how much money you have in the bank. But until those things are evaluated, it really doesn't mean much. We see that particularly with self-employed borrowers who maybe take advantage of a lot of deductions and interest rate write-off to reduce their taxable income to where their taxable income may be significantly lower than what their cash flow might look like.
Right.
So it is important to go through that process and not feel as though your lender is being evasive or intrusive in your financial situation. You just want to make sure that you don't get too far down the road with buying a house, spend a lot of money on appraisals, inspections, all kinds of other things, only to find out in the end that, hey, something wasn't quite checked.
Yeah. All right. Well, we are going to go to a quick break, and we'll be right back to talk again with Mike Lesmeister. We've got a few more questions for you, so we'll be right back.
Great.